What you hear is the sound of Russian troops as they took control of Ukraine's nuclear power plant, located in the southeast of Ukraine's capital city, Kyiv. Hello folks! It's Friday, March 4th, 2022. This is our pre-morning bell report on the stock market. And oh boy! What a long weekend we have on our hands in the wake of what is happening in Ukraine. There is no other way to put it, folks. We have said it time and time again. The stock market hates uncertainty. Uncertainty is the key reason why investors choose to leave investments in the first place. Think about it like this. If you had a small corner store you would like to support with some capital, but you suddenly heard the operators were not certain if they would be around next week or next month, would you go ahead to put your money there? Same thing with the stock market. Hence, when the largest power plant in Europe has been seized and occupied by the Russians, expect intense volatility in the stock market today. Volatility doesn't mean a crash. We are not in the business of picking tops and bottoms. We can't say how low or high this thing may go. If you are not built for this kind of up and down swings, then the stock market may not be for you. So, to put it clearly as it is in the news, Russian forces now occupy Ukraine's nuclear power plant. This happened in the early hours of today. Some smoke was spotted there earlier. However, as at the time of putting this report together, the power plant is considered stable and operating normally. Officials have further said the fire was not in the plant, but in the training ground. However, the Russian takeover of the power plant has caused a world alarm. This is why we expect some intense volatility when the morning bell goes off in Wall Street this morning. We don't want to spread fear. That is not what we do here. That is what the mainstream media is for. You can check them out if you want a dose of fear for the day. The word Chernobyl has been making the rounds, and the NATO Secretary General has issued a warning, calling Russia's takeover of the nuclear power plant reckless, and adding the need for Russia to withdraw all its troops and why this war has to be ended. Some are reading meaning into those words, like it could mean a possible escalation from NATO. However, for now, the uncertainties continue to mount, and as we said earlier, uncertainties are the kryptonite of the stock market. So, once again, expect major volatility. Already, in the pre-market trade, Dow futures lost over 500 points. As at the time of this report, it has tried to chop off some of those losses. But we don't think that it's over for the day. This could be a sure bump to the recovery the market was making from Friday last week. Who knows, some of you might be wondering, are we suddenly expecting a crash in the market? Far from it. A pullback is part of stock market dynamics. At the same time, the market could shrug this off like nothing happened at all. However, the reason we place bets that today could most likely be very choppy is because European markets have already fallen sharply. The leading European index, the Stoxx 600, has already lost 2.5% today. The euro is also down, looking like it's headed for its worst week in 2 years. If you also add to that the expectation of the February job numbers, you see that investors are wary right now. The expectations are that the non-farm payrolls added 438,000 jobs in February. Unemployment to drop to 3.9% from 4%. If any of these come out worse than expected, it could add more volatility to an already volatile morning. Yes, the market has shaken off bad job numbers in the past. But the story may be different when you have a nuclear power plant just taken by the Russian military. The volatility of the market all makes sense when you check the setup out. The 10-year yield has a sharp drop. As at the time of making this report, it is below 1.8%. In the same time, the relative strength of the dollar index, the DXY, has spiked. As at the time of putting this together, it is above 98. The combination of both sharp movements is indicative of what investors are thinking. This is a run to safety by investors. Simply put, Investors are leaving risk-on assets and seeking safety elsewhere. That is why the 10-year yield has that sharp decline. And clearly, the dollar is still valued by investors. Hence, they are holding it. Hence, it could be that we see a more downside to the stock market. And on the back of that, let's talk about cryptocurrencies too. Bitcoin is taking a hit this morning. As at the time of this report, it hovers around 41,000. You know our take on this. If you have some spare investing capital, get in. If it goes lower, better for you. These things are gonna moon sooner than one can predict. The reason for this expectation is clear as day. We look at the dynamics. With more uncertainty in our world, more and more people will see the need to seek a sure way of keeping their money away from the government. And cryptos offer exactly that. Also check out the Bitcoin news today in the wake of this. Ukraine has raised $54 million through Bitcoin donations. That does not sound like an asset class that is going away anytime soon. Yes, it may be plagued with volatility, but our overall projections show it's mooning. This is not financial advice. Discuss your financial decisions with a financial advisor. Our opinion, however, is that this is looking good for cryptos. With all that is going on, we continue to stay the course. Though it is a volatile day in the market, we would not be selling this market. You may be lucky if you do, but we see that the dynamics give no cause for alarm. We can't pick tops nor bottoms. Those who do are like a broken clock, right, every now and then. The overall look for this market, despite the bad news, is a bull run. You have to recall that our government perpetually uses crises to her advantage. This will be a reason to ask the Fed to print even more money. And the more money they print, the more money they stuff into the debt market. Yes, it is bad for inflation. It will take out the average guy in the street. Thomas Sowell said inflation is the government robbing you by reducing your purchasing power. True. However, for us as investors, we are looking at this from a different perspective. How can we make money now? We are not economic activists. We are investors seeking profit. And profit comes when you realize that the inflated debt market is about to get even more inflated. And that will go on to inflate asset prices. Hence, stocks will have a massive bull run. If you have any interest in checking out some of the stories we highlighted in this report, please check the link below. As we always say, it is best to keep it simple. And remember, stick to your risk management in this game. The old saying of the market continues to remain true: bulls make money, bears make money, pigs get slaughtered. Thank you so much for watching. Please, kindly consider subscribing. We release videos every US market day, so please be at liberty to check out our other videos. It really means a lot to us. Thank you.